Hey everybody, Brian Shannon here from AlphaTrends.net. Today's Friday, the 16th of July, 2021. Let's take a look at these numbers first, then we'll look at the charts. The market's had a pretty rough week. S&P lost about 1%, same as the Nasdaq. Russell 2000 continues to be the laggard here, down 5% on the week, so big hit there. Semis also really got hit hard today and the last couple days, down close to 4%. So things are definitely changing in terms of the sentiment for this market. And we've had a great run. We're still in a primary uptrend above this rising 20 and 50-day moving average. We can draw a trend line off of these lows, looks something like that. Comes down close to the 50-day moving average. This line, by the way, is something, this vertical line is something I put on there just to keep me aware of where we were 50 days ago and how that's going to change the slope of the 50-day moving average. Now, of course, we had the bigger breakout from this level at about 425. So if we pull back down to there, we're still in good shape on a longer term time frame. But as you know, I'm a swing trader, so I look at where are we in relation to the near term volume weighted average price levels. We lost the volume weighted average price for the month, that's this blue line, today, and it sold off pretty hard from there. So now I'm looking at this market. We're below the 5-day moving average. That's up in here. Let's just clear some of this stuff off. There's the 5-day moving average. So I'm looking at this as guilty till proven innocent on the intermediate term. If we see a rally on Monday, Tuesday, that looks something like this, then I think it's more likely that we're going to see further downside. But anything is possible. However, the path of least resistance on the intermediate term tells us don't be a buyer of these stocks on pullbacks. Wait for them to settle out a little bit. Things are, definitely changing for the worse here in the intermediate term. I'm certainly not going to be the one to call a top. I'm not that smart. No one's that smart. No one's called the top yet unless you called it on this day. But if you called it on this day, which was Wednesday, you probably called it over here, over here, over here, and over here. Don't listen to those people who try to tell you they know when the market's topped out. Our first level of downside interest is at about that 430 level, and then again, as noted, that's about where we see that 20-day moving average. Below that, about 425. The Nasdaq has been the leader, and we've had just this phenomenal run off those May lows. So when you look at that from 315 up to 365, that's a huge rally, and we haven't really seen much of a pullback yet, so don't be surprised if we see a deeper correction. I drew this trend line in off of those June lows, and here we can see maybe that that's a level of interest. Someone said on Twitter, Brian, I don't know how to use these levels of interest that you talk about. What we want to look for is to see how it responds on a shorter term time frame at that level. If it does something, if it's still below the declining 5-day moving average, we look at it and say it's guilty till proven innocent. We look at the next level, and then we see where does that 5-day moving average start to flatten out, and maybe it does something like this. Then we know we want to be a buyer here. We don't want to be the buy the dip person who claims they can buy the exact pullback at each point. As you know, I don't believe in buy the dip. I believe in wait for the dip to kind of settle down. Short-term buyers come in and start to establish levels of support on shorter-term time frames, like a 15-minute time frame or a 10-minute time frame. But right now, with a declining 5-day moving average, it's guilty till proven innocent. Today, we rallied, right up to that 5-day moving average and found supply. On Monday, we'll be getting rid of this data in that 5-day moving average calculation. So as long as we're below that level, we're going to continue to see the 5-day moving average decline. That means in the intermediate term, it's guilty till proven innocent. The Russell 2000 has been the real laggard here. This is something that I've pointed out for Alpha Trend subscribers, that the potential level where this market might find some buyers is based off the measured move. Let's just call that 232 down to about 220, so 12 points. This is A to B, that's 12 points. So if we look at this peak right here, let's call it 227, 12 points off of that. would lead us down to 215. We're basically right on that. So here's a potential level of interest that where the buyers might show up. But when we look at the shorter term time frame, there's absolutely no evidence that the buyers are gaining control. We've seen for the last couple weeks in this market, the 5-day moving average has been declining. Now we got briefly above that level and made a higher high, but when the 5-day moving average is declining, I look at those as don't buy them. They're guilty till proven innocent. Or if you do buy in there, be quick to get out, because more than likely we're going to see that continued pattern of lower highs and lower lows. So the Russell's been hit pretty hard. We're trading in this bigger range that we've been in for the last 6 months or so, 5 months, and we've got the 200-day moving average down there. One possible scenario is that we get hit real hard next week down through that level, and if it gets down below the 200-day moving average, I think it's more likely to bounce from there. So just be aware of that. Semiconductors, this is what I was talking about on on Wednesday, that we saw a break to new all-time highs. That failed, and I said now we want to look at this as a potential of, from a failed move could come a fast move. That's exactly what we had. We broke this trend line that was holding for a couple of about 2 months there. Now we look at, here's our next level of potential interest. We closed below the 50-day moving average. Now perhaps we come down to the year-to-date volume weighted average price, which is found about 241.5. Switching back to an intermediate term time frame. You want to tell me you want to buy the dip? It continued lower throughout the day, all day long, closing right on its lows. Anyone who's buying the dip lost money. There's just no reason to put that risk in your portfolio after we've had such a huge rally. Look at where we've come from. You can't expect these markets to continue to rally like this. Biotechs, they bounced a little bit this week, but they've been, here's the daily time frame, but they've been weak. And the recent pattern is we had this high, we had this low, we had a lower high, we had a lower low. We need to get back above here just to become neutral. Financials continue to kind of trend sideways. When we look at it though, where were we 50 days ago? We were right here. Now on Monday we get rid of that data, and then Tuesday we get rid of this data, Wednesday, Thursday. In other words, this 50-day moving average is flattened out. Now it's going to start to decline. When I see a 50-day moving average declining, I consider it on a longer term time frame guilty till proven innocent, meaning it might come all the way down to the year-to-date volume weighted average price. So when we look at the 15-minute time frame, a possible scenario is rally up towards the month-to-date VWAP and then continue lower. As long as we're below a declining 5-day moving average, you don't want to be a buyer. Let's talk about Bitcoin for a moment. Bitcoin, the volume weighted average price that I've been talking about ad nauseum, let's look at it on a weekly time frame so you can see where it's from this breakout a year ago, basically, July of 2020. That volume weighted average price keeps finding buyers here on the daily time frame, and over again. What we're seeing though at the same time is we're seeing lower highs. The pressure is building here. One of these days, the people who are buying at this volume weighted average price are going to say, you know what, there's just so much supply, let's pull our bid. And when they pull their bid, guess what's going to happen? We look at the weekly time frame. More than likely it's going to come down close to the volume weighted average price off that March 2020 low. That puts it in about 25.5 or so. So be careful with Bitcoin. I don't see a lot of bullish sentiment, which is good in a way, but it's also, the pressure builds. The more times any level of support is tested, the more likely it is to fail to hold as the buyers at that level become overwhelmed. Supply is getting more aggressive through time. In other words, we're seeing more repeated tests of that support level in terms of 5 days ago, 10 days ago, 20 days ago. And we're seeing lower highs, meaning the supply is becoming more aggressive because they're not waiting for a bounce to 36,000 before they take control. They're not waiting for 36,000. They're not waiting for 35. They're selling more aggressively. The year-to-date volume-weighted average price, the average price that this stock, that Bitcoin has traded at this year, is 42,700. There is bad things going on here from what I can see. It's more likely at some point to break down and break down hard for that next leg lower. So I certainly wouldn't be a buyer, and maybe it surprises us to the upside, but the path of least resistance is lower. The trend is your friend unless you're on the wrong side of it. Have a good weekend. Thanks for tuning in.